What's up guys, my name is Kevin. Today I'll be talking about how to be confident in investing as a long-term investor, and number two, controlling your emotions in the market day to day and just having that long-term fixated mindset. And when I first started out investing, I had no clue what the heck I was doing. I was just experimenting with like different things, and you kind of like should do that. Doing some option trading, joining different groups of option traders, learning how to day trade, and see if it kind of like resonates with you. For myself, it didn't. I lost thousands of dollars going that route, but I learned it was a costly mistake, but I became wiser after that. I found out a simple strategy that Warren Buffett, Charlie Munger, and Financial Education does on YouTube, which is being a long-term investor, having that long-term mindset, and just making money passively and just growing their money compoundingly. And to gain more confidence in the market and just really just seeing that short-term volatility, seeing price actions going up and down, it's all about experiencing the market firsthand. And just start with a small amount of money and invest into something that you really understand on a high level. When I make investments, I read like the 10K, the 10Q, listening to conference calls and investor presentations, and just writing my own projections. And like, you could build that skill up over time, but invest into something that you use on a daily basis. And we could say, okay, I go on Instagram and Facebook every single day, and I have a game system called Oculus, and a company called Facebook owns all those companies, Facebook, Instagram, Oculus, and they make most of their money from online advertising. And you probably have seen those target ads, or if you have your own business, dropshipping business, you probably have used Facebook ads, Instagram ads. And why not invest into something that you already understand on a high level, their basic business model or service? We can look at Amazon. The average American household has at least ordered one thing from Amazon in the last 6 months. In my household, we order 2 to 3 things a week from Amazon. That 2-day shipping. They own Whole Foods, which I go to once a month for their high quality foods and products. They own Twitch, and they own one of the biggest cloud services called AWS. We can look at Google. They own YouTube. If you spend most of your time on YouTube watching videos, why not invest into that company? Those companies are great companies to invest in. I'm not a financial advisor, but they're going to be here for the next 5 to 10 years, 15, 20 years down the line. They have great business models, they have growing revenues, good management team, and have a strong moat in their certain sector. And I would just start out with one of those big tech companies like Microsoft, Apple, Facebook, Amazon, Google. Pick one of those and start investing it and just build out your cost basis. Adding more to it each and every single month is cost average up. Those are great companies and they're not that volatile. And just start kind of like small and just like look up on Google and see like what products or services you use each and every single day and see if they're public. Like most retailers, restaurants are public. If you use a software that has a subscription model like Adobe, it's public. And just like becoming aware like what are products or services that I use and already understand on a high level. I keep emphasizing this in this video and just invest into that. And I kind of like learned this style of investing from Peter Lynch, which is called like kind of like common sense investing. We retail investors have the edge than hedge fund managers. Because why? Because hedge fund managers have a lot more restrictions than us. They can't invest into something if it has a smaller market cap. They have to diversify into many sectors, and they don't have that kind of like free will to get in and out of stocks right away. But as long-term investors, you're holding it for 5 to 10 years down the line. You don't really care what happens. Kind of like, which brings me to my next point, being unemotional in the market. When you first start out investing in the market, and most of the people I kind of like know started investing during the crash. And what happened during that crash? For myself, I didn't panic. I didn't sell during the crash. I knew from my mistakes I learned in 2019, I had a decent amount of cash for my age on the sidelines, and I started buying into the market and focus on the sectors that hit the hardest from the crash, which were the recovery plays. Each and every single day, I saw the market going down, but I didn't buy every single day. I bought every third or fourth day when the market was going down. Cost averaged my way down. I timed the market a little bit, but I would just cost averaging down. And when you understand something on a high level, you don't care what happens in the short term. Mainstream media, macroeconomics could scare you. If you're investing into well-sound businesses for the long term, like what the Intelligent Investor book says, you'll be fine. It's all about having high convictions and knowing what you're investing in, thinking for yourself and empowering yourself at a young age to know how this thing works. It's all about just experiencing it. Start when you're young, in college, and seeing how the market fluctuates, and seeing like which stocks in your portfolio are volatile or have a high beta. And most high growth stocks that are popular go up and down 5 to 6% each and every single day. And sure, that's the case, but in the long term, it's going to be a straight line up. In the short term, it's going to be up, down, up, down, up, and down. Where if you look at and study a chart, the S&P 500, Dow Jones, or NASDAQ, you'll see over time the market goes up, in theory, because of many things in our society. Growing economies, changing technologies, innovation, people spending more. Really just kind of like summing up this video, it's all about starting now at a young age and experiencing the market firsthand. That's where your confidence in being unemotional and just building those great habits and lessons from the market. I only have about, I think, 2.5, 3 years of experiencing the market right now, and it's just the beginning. I'm learning lessons and mistakes each and every single month, week, and year in the market. I'm continuously being a student in the market and just being and seeing like how volatility works, how irrational rational people are in the market and separating yourself from conscious investors and unconscious investors. You just want to be conscious in buying and holding for the long term, and you're going to separate yourself from the 99% of investors out. Thank you for watching, and peace out.